Well, good afternoon, everybody. Hope you're having an amazing day. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in the chat box in that comment section. Let me know that you can. I would greatly appreciate it. Roman, afternoon. Thank you, Kevin. Hey, Lee, appreciate that. All right, all right, all right. That's all we got in here is just a handful of you. Keep in mind, as we get started here today, everything we look at is for educational purposes. Nothing's meant to be advice or recommendation. Morning, Helen. Guys, you got a lot of stuff coming up here, including Monster Market Movers, which is this Wednesday night. What some of you know and others do not know is we started last month in a series of teaching you how to actually trade all of the various Fibonacci patterns that I teach. Right? Last month, we went over the proper way to draw fibs. That had to be first and foremost, right? Once we got that out of the way, this Wednesday night, we'll be doing, I believe, I'm going to attempt to do 2 different trade setups in there this week of the 6 that we trade. I'm also going to look to potentially do a bonus one. So anybody that's registered for next month's Monster Market Movers would automatically be registered for that. But don't miss out on it, folks. I think, yeah, actually, Lee just dropped a link in there. Listen, if you're not a member of Monster Market Movers now, it's $49 in your very first month. So take advantage of it. You're going to see some of the trainings, and you've got access to everything in the back end that we've got there, which is about 5 or 6 hours of prerequisite training, along with the last trainings that we've done. So take advantage of it. SPX coming up on the 19th. Mastermind comes up tomorrow night. I teach that training. Power Hour, here we are. We'll be back again next Monday, which will be the 19th. That will be our last one for the year. I'm looking at my calendar. The 26th is Monday, which is observance of Christmas. We are off primarily that week. Brandon has 1 class that week only, which is on the 28th, right? And then Trading You is on that on the 28th as well. It must be Tony, because I don't normally plan anything on that week. And then you've got Coach's Playbook, of course, this Friday as well. Power Option Plays, Covered Call, Explore, E-mini Think Tank, all on their schedule for this week, right? Well, again, I'll remind you of next week as we, the Christmas week as we get there, right? Oh, didn't want to do that. What happened there? I hit escape instead of, let me just go over to this other monitor, instead of a down arrow. All right, here's our follow us page. Make sure you're following along with the various social platforms that we've got out there. And then give the gift of financial freedom. Folks, 1 Trade Away Challenge is a great training. What an amazing gift to give to somebody to change their lives. Think of if your parents had handed you something like this, step by step, what to do for 30 straight days. And it's really, there's some bonuses in there, so it's a little bit longer than that. There's extra stuff I did on top of it. But we'll call it 30 days, right? Since we already named it the 1 Trade Away Challenge. And it is 30 days to your trading success. It's $49, folks. Take advantage of that. Lee dropped a link in there for that as well. Click on that, and $49. It's what a great gift for somebody. All right, I don't want to share that with you yet. What trades did you guys do today? Drop them in. I want to see. What did you guys come up with? And I'm going to ask a question. We've got 2023 coming up. What, if anything, do you guys want to see done differently or on top of, in addition to whatever, anything that any thoughts? I'm not saying we're going to do everything, but any thoughts that you have, send an email to support and let us know. We'd love to see this, or is it possible to do that? That piece doesn't really help me much. Can we do a different piece instead? Of course, you'll have a suggestion, right, of what it is. But if you have stuff like that, drop that in there. My team will compile that and give me that, and we'll see what we can come up with for 2023. All right, so let's see, John, afternoon. Naked puts on Tesla, Abercrombie, and SPY, Wheel of Fortune, Plug, and SPY, diagonal spreads on Amazon, cash flow, $1,300. Ka-ching, baby. Great job on that, John. Brenda said she got no trades off here today. Yeah, I'm working from my home office today, not the office. We've got our button with smashing the hammer, right? That great little video Sean made. But I'm from home today because I'm working on Monster Market Movers, which is Wednesday night. It's about a 18 hour work flow to get everything together for that. And that's just the candidate analysis, right? Debbie said SPY trend. All right, great, Debbie. I hope it was a profitable one for you. Did a trade on SPY today. Let me share that with you guys as you're dropping them in. Come on, folks. Funded, non-funded, doesn't matter. Break even, lost money, made money, doesn't make a difference. Drop in those trades, whatever it was, drop them in. All right. It's all about sharing here. It's about accountability here. It's exactly what it comes down to. So if you look here on Qs, on QQQ, all right. There you go. Debbie said, made money on SPY. I love it. Barry said, far too many to list. I love hearing that, Barry. Great job. On QQQ, we had a great setup in there off of this bottoming pattern right there and a bounce right into this candle, right? It closed right there. It bounced right up. Great move from about 281 up to 283, 281 and a half. 283, so it was a great move. It was about 75 cents we picked up there, right? And SPY didn't really give me what I was hoping for on SPY, so I did not get a trade off on it. I never got the pullback to the S1, which is what I was really hoping. When we failed right off of the pivot, I was looking for a move back to S1 and a bounce. I did not take anything off of the midpoint, that S0.5. I don't normally trade off of the half points. They're just potential targets on wide pivot levels, not narrow pivot levels. So R1, R2 is too narrow. R2 to 3 is, yes, fine. We want to take off at the midpoint. R1 to R2, I'd let it go right there and blow through the midpoint. It's just not worth the time in there. Okay. Good. Larry said 23% on win. Ka-ching. I love it, Larry. Great job. Great job. Let me ask you a question. How many of you are in the Atlanta area? Give me a 1 for yes. Don't give me any no's. Just give me a 1 for yes. How many of you are in the Atlanta area? And when I say Atlanta area, let me make it easy. Near the airport. How about that? Near the airport. And I'm just checking something, guys. I'm not dissing you by watching my phone here. I want to see if we got it created yet here. So not a whole lot of you. Let's see. So if I can get it, I'm coming to Atlanta in January at some point. If I can get an early enough flight in, and that's, I was just seeing if my agent booked a trip yet. She has not. So if I can get early enough flight, and I may let you guys know, hey, I'm going to be in this hotel at this time. If you guys want to come and hang out, we can do that and grab some dinner and just chit chat. So, but I will let you know as we get closer. All right. Yeah, I love to do it, Larry. I know it's always fun, right? It's always fun when we do that. Okay, so let's do this. I want to go and jump in to the SPX. Right? And oh wait, the other one was Square. I didn't talk about Square. All right. So guys, if you, wow, that's great. If you had, so you can see the entire Fibonacci on Square. All right. Low price stock, $64. Some of you are kind of gagging of, oh my God, Rob, really, you're trading this? Square moves about $3.80 a day at this $64 stock. So 5% move every day, give or take 5+, right? Well, yesterday, Friday's close. Yesterday on Pop, we had the 8 was down here. You can see where it was. Look on this candle. I got to move my mouse to see it because the moving average is pushed behind the candle when I go over it with a mouse, right? So on yesterday's candle, you can see the 8, the 21, the 55, even the 5 were all right there. Today, we got a retest of that 63.65 level and a bounce. And what a bounce it was, right? So if we go back here, we go to Square. Rob, I don't see no dang bounce in there. We went, well, we did bounce, right? But watch this. What happens when you flip to a 1? We gapped down. We pushed below. We came back up. You know, we gapped down, we pushed down and closed below, we opened up and took off from there, right? There was the entry right in there. This is a close enough close on that red candle. Boom, we pushed right through. This is just pennies below that. We were at a closing price of 63.35. So it's 30 cents, as I said, pennies. So the entry came in right in here. What a great move on Square. You're looking at getting into that stock about 64, maybe 64 and a quarter, somewhere around there. And right now it's at 66 and a quarter. So you're talking about a $2 move on an option. Okay. $2 move on the stock price rather, right? What does that do for you as far as an option price goes? Well, a $2 move with a 70 delta. Remember, we always look at 65 to 85. At a 70 delta, a $2 move gives you $1.40. We'll call it $1.50 because of gamma and delta going up. So you're looking at $1.50 move on a $3, $4, $5 option, folks. This was a great setup in yesterday's analysis that we went through, right? I highlighted everybody out as what their bias was, and of course, what their rank is. That is probably one of the most important finds that I have come up with for my students in the last 5 years. And what I mean by that is I've always seen it. I've always known it was there. I've always done it without having a systematic approach for it. Now we've got a system to first identify bias, then identify rank, have a way of combining those two together and only taking the trade when it is the right trade, the correct trade, when everything, and I mean everything, all the stars align. If not, don't do it, right? Or do it as aggressive, but you know up front which ones you're looking for that alignment and which ones you're position one of the chair. Yeah, I ain't interested in this stuff. I'm just gonna hang today. And we had a few, as of yesterday, when we looked at them, we had of our 20 stocks, we had 1, 2, 3, 4, 5, 6, 7, 8. 8 of our 20 were like, yeah, maybe later I'll look at them, but I'm not spending any time on those puppies in the morning, right? So, and the reason I'm bringing Square into this mix, folks, is here we are, December 12, right? Yes, 12, okay? We're not that far away from the new year, where everybody starts their resolutions again, right? We all go to lose weight. We all want to make more money. We're all going to do more of this, less of that, whatever it is, okay? Well, that resolution where you resolve to do something differently, whatever it is, and what I'm talking about for our purposes is make more money. I'm going to dig in. I'm going to learn this stuff. I've got access to it. I'm going to take that trading you every week. I'm going to be in power option plays every week. I'm going to watch the videos, do the paper trades. That resolution is made. And how many people make a resolution to lose weight on January 1, and by January 4, they have joined the gym, just never showed up, and December 31 comes, they still haven't showed up again yet for the gym, but they paid for the year, okay? The resolve that you look to make, that resolution that you look to make, I need you to really take a hardcore look at what it is that you are doing, what it is that you have time to do. And when I say you have time to do, that's a really bad way of saying it, because someone can easily make an excuse and say, I have no time. All right. I was working 12 to 16-hour days. I understand what having no time means. Right. But I figured out how to do it. I didn't eat lunch in the lunchroom with everybody else. I ate it in my office, and I traded, I learned. I didn't have the desire to sit with others and just talk about other people is really what it was. Did you see what Jim did? Oh my goodness. You see what Billy did? Oh, you see what Matt? Who cares, right? I didn't have the desire for that anyway. And I was a supervisor, so I really shouldn't be doing that no matter what. But I did have a desire of how I can financially change my life. I saw something this morning on one of the social platforms, someone that I follow, and it was a lot of motivational stuff I follow. And the person the video that I'm watching, what they're talking about in there was how people today have such a difference of what they're able to do. And the guy was showing himself that, I would make $75 a day shoveling snow, right? And my goal was to make $100 a day as a kid to shovel snow. But I was also doing 16 or 17 hours of shoveling. And my brother and I were out ringing bells all day long. For $5, $10, we'll shovel your sidewalk. How much snow? Maybe a little bit more, right? And so forth. But the guy came back and said, why would you do that? Why would you not come home, sit in the comfort of your house, put on a fire, get a cup of tea, sit down, relax, turn on a television or music in the background and do something on the computer? And he's talking about making money, not necessarily trading. He was talking about making money, and I'm doing the same thing. You could go out and as an electrician, do electrical work on the side. There's nothing wrong with that. Or if you're a music teacher, you teach music lessons on the side. Nothing wrong with that. But what if you took some of that time and devoted it and committed it to this, right? So it really comes down to how bad do you want it? and what are you willing to give up for it? There's two things we want in life, usually most of, more time and more money. Whichever one you want, that's the one you're going to have to give up. You have people like doctors who say, I've got money, I just don't have the time. Well, obviously, you're going to have to find time to learn how to do this. You've got others that say, well, I ain't worked in 5 years, Rob. I got plenty of time. I have no money, right? You're going to have to find that money, whether you go work at a McDonald's or shovel snow or whatever it is. You're going to have to find that money to learn, to be able to have the money to put into the account to potentially trade, right? One of the things, and there's a lot of changes that have been made on the website, folks, on Wealth Builder's website, and a lot new ones coming yet. But if you go under trading resources, right? Every one of you should be doing this right now with me. Going to trading resources. Hopefully it's here. Let's see. Here we go. WBHQ time allocation worksheet. Sean in our office, many of you know who Sean is. Sean has put this together a couple of years ago now, right? Downloaded. It's an Excel spreadsheet. It's pretty simple to understand. Put in how, just block out how much time, how many, or what you have each time of the day. Well, there's no way that I can do anything between 8 and 12, which is I'm working there, right? But 12 to 1, I have lunch. So that's open time, right? 1 to 5, I'm working again, right? Well, okay, but I travel to work too, Rob. Well, me too, right? I traveled to work. Places that were as far as an hour away by car. So what does that mean? My car became a mobile education studio, right? Or if you're on a train, same thing. You're popping on a headset, you're watching on a tablet, on your phone, right? The whole idea behind it is, and all of this stuff here, right? But all of these resources, but the whole idea behind it is for you to figure out how much time and when you have it available. And that should be for everything, right? If you've got, your daughter's dance recitals every Wednesday at 8 o'clock at night, you lock that in for an hour and you just block that time out. Or your son plays baseball on, Saturday, or whomever, your daughter plays baseball, whatever it is, whatever time is locked in, family time, date night, you block that out. And then you've got this much time available to you. One of our students, Amos, phenomenal trader, right? We sat with him after he filled out this allocation worksheet in a one-on-one that I did with him about trading. And he came to New York for a full day. And we had him fill this worksheet out. It took him 2 weeks for he and his wife to actually really dig in and say, what do we do and what do we have to do? What can we not do to put more time into this business, which is trading? And Amos already has 2 or 3 other businesses that he runs, right? Runs, right? They're his businesses. So use that allocation worksheet and then figure out what it is that you want, what time you have available to you. And then what is your focus, folks? Right? What is your main focus? Are you very hyper focused on futures? Then there's some Brandon stuff you should be looking to trade. Are you very hyper focused on trading options? Then there's some stuff that I do or Tony does, or another gentleman that we will be starting with a training that he'll do probably February. You should be following what he does. But you really need to figure out where you are, what you want, right? What is your why? Right? There's always a big part of it. What do you want? And then what strategy and system are you going to follow? If we look here for a second, let's see. So guys, if you come over to the homepage, right? What type of trade am I? Brand new, intermediate, experienced, right? You could fill out some questions here based on that, right? Fill some questions out on there and book some time with one of my team members to help you understand what would be best for you to do. Do your worksheet, figure out what you've got time available, come up with the idea of whether you want to trade futures, options, for what do you want to do, right? Are you a stock trader? Are you looking to sell? You're looking to buy, meaning selling options like a covered call, like we had John list out here before, naked puts, Wheel of Fortune, diagonal spreads, all selling strategies that John is doing, and brings in $1,300 for the week. Excuse me. John, just out of curiosity, how much time will you spend throughout the course of this week managing out the positions that you just put on today? I will tell you mine after John types his answer in. If he's still here with us, I couldn't tell. There's a lot of J's here. But go and do that, folks, and that will give you at least a guide, a place to go, an understanding as that New Year's resolution comes around. you'll have an answer of what it is that you're looking to do. Yeah, it is block. Yes, Barry, you're right. It is block. I just still call it square. But it's block for for SQ, right? But it is still square to me. That's who they've been. They changed the name because they wanted to relate more back to blockchain, right? You're welcome. So John said for all of his positions, not just what he did today, all of his positions, and John's primarily a seller, all of his positions 2 to 3 hours a week, right? For my covered calls and diagonal spreads, which I primarily do for retirement monies, that right there takes about an hour of time for me to manage every week, right? That doesn't mean that I'm fast and John is slow. John's doing all of his positions. That's not me managing anything else. That's just my diagonal / covered calls, okay? So, all right, let's make sure I didn't miss anything there. All right. So with that, let's go back and look at S&P 500. I'm going to take the symbol grid down here once it comes up, okay? And let's get a little bit of a bigger picture. So we are still in this overall bearish, longer term bearish, pattern or trend with a very short-term bullish move to it, okay? We've had a nice little bounce, and we had this nice bounce here. We came back, gave it all back over the next 3 or 4 days. We had a little bounce come off of there, and we are now in D-bond, which is the dreaded box of neutrality, right? We're just in this sideways. We still need one more day to really identify the D-bond in there, the dreaded box of neutrality. 4 days is not enough. I'd really like to see at least 5. Go figure, it's a fib number, right? And we're not closed today, so it's only 3.5-ish, okay? So we're in that sideways mode there right now. So we're looking for a breakout. Ironically, look at the top of the rectangle where it is right now. That takes us into about where that 8 moving average is today, give or take. Okay, a little bit above, a little bit below, whatever it is, we're right about there. All right. So we have on the S&P 500, we have this slowdown that has taken place. Right now, if I were ranking this, it's got a neutral bias with a rank of 1. So if we were closed here and this was a stock, I could get very excited about this stock, and it would also be considered a switchback trade, which is one of the trade setups I will be teaching in the Monster Market Movers. That's actually the goal for this week, is to teach not switchback, it's to teach the zero line breakout and the inverted zero line breakout. Those are the 2 that I want to do this week. Then the additional ones will come in the next training. So we're looking at the S&P saying, all right, are we going to break out? Because remember, if you go back and look at, wrong one. If you go back and look at the weekly options, right, the weekly options, weekly chart, we've got an overall bearish pattern on the weekly. We go back and look at the monthly, we have an overall bearish pattern on the monthly. We've not really been able to break out of the upside. We came in and kind of broke out with the corner of the candle last month. For November, we just closed slightly above that line on that diagonal part, right? So give or take, you're right about there, closing right about that line. Gap opening up and gapping and running back down over the last couple of days has put us where we are, back inside of that line again now. Intra and neutral bias, right? So the daily chart, there are people that are screaming, this is the time, this is the time. And you know what? They may be right. Sooner or later, they're going to be right. Sooner or later, if you continue to guess, you're going to be right. There's no question. You are going to be right. It's just a matter of how much it costs you to be right, of trying to jump in early. Unless that's your plan and you do some of the things that I do, where I buy over a course of X times, looking for that best price, because I know I'm not going to time the bottom. There's no way anybody is going to consistently time the bottom of the market. And if they do, then they're going to jail, just like Martha Stewart did. Okay. Yeah, there you go, Trip. A broken clock is right twice a day. A broken clock is right twice a day. Exactly. Oh, goodness gracious. So be careful when you're looking at this, folks, right? When you look at VIX, And okay. So we look at the VIX, we're kind of in the middle of the green zone, right? Ish, not exactly, but if you took and broke it up into thirds, right? If you broke it into thirds ish, right, of this green zone, right, you're looking at about 1/3 and 1/3, right? So we're in that middle third of our green zone, to give or take, right? To just approximately, okay? So, but we are in the green zone right now, real time, or just about real time. We're at 22.83, so still fairly low on our VIX right now, which is great. But you cannot rely on VIX and say, well, we're low on VIX, so that tells me that I'm good to go and, you know, buy stocks. No, we could easily snap back to the upside. You saw what that one day did, right, last week. With that one day, that one move to the upside, right, can be devastating for us, okay? Let's see. All right. Let's see. Debbie said, if you look left, there's a lot of resistance. I'm guessing you were talking about the S&P 500, Debbie? So if we bring this in, yeah, I mean, listen, right now we've got a lot of concern, period, on this. But folks, I am not trying to discourage you saying you should not be trading, right? I think that's the exact opposite. I think you need to look at what's going on from the VIX, from the market, from your own risk profile, and develop a systematic approach to how you are going to take trades in this market condition, right? It's crazy what the opportunity is right now. All right, I'll take a look at that, Brenda. Thank you. Blade said, is there a head and shoulders developing on the SPX? I mean, if you're looking at this as a head, yeah, you could, but man, oh man, this is just like from May, right, of this year. So, and what also means is you're looking at the armpit, right? That's a shoulder, that's the armpit, right? Actually, this is the armpit of it. So you're talking about from May until December. It's a very long pattern, but yes, you do have a shoulder, a head, and a shoulder right there, right? Spot on with that, Blade. I haven't used it. And again, by a lot of you that are in here are in Trading You, and we're not in the last Trading You that I taught last week, right? Trading You, we do 2 times a month. We do a live 1-hour trading session along with all of the materials that are in there, right? And that the live trading that we do is in reference to what's going on in the overall market, right? And the strategies that we teach inside of Trading. Okay. This time I talked about what it takes and what you need to be looking for when you're charting the S&P 500. And I've done stuff like this before, but never, ever have I done a 1-hour, full hour training on charting the S&P 500. And not my observations alone, it's what you need to do to find that observation for yourself and when you should do it. So those of you that are in Trading You that did not attend live, make sure you watch that training. It's not what we do here for 10 minutes or so. It was 1 hour talking about how we draw the fibs, how we use an ABC pattern, boxes of neutrality, fib levels, trend line, all of that played into what we did, to the point that I wrote 9 or 10 bullet points of what you needed to do out for that. And normally when I write this stuff out on a Word doc or notepad, when I'm done, I delete it. I saved it because nowhere else do I have anything written down that's that extensive on what to do on the SPX, right? So go back and watch that training. Yeah, you're cutting trees off your house. Oh boy, Blade. Yeah, go back and watch it. You will not be disappointed, okay? At all. All right, cool. Just FYI, I'm going to say it here. Take advantage of I don't really care. I'm just making everybody known when someone doesn't come back angry that we didn't tell them. The lifetime access to Trading You, those of you that have it, awesome. You've got it forever. Don't worry about that. But those that are not a lifetime member of Trading You, that lifetime access is going away. I'm not sure if my team has disabled it yet or not. They're supposed to be. So if you were thinking about that, you may want to go and grab it before we take it down. Jim said, going back to time allocation worksheet, Caleb Williams won the Heisman Trophy Saturday night. Listen to his acceptance speech. He wrote out a plan with his father and stuck to it. It can be applied to trading. I appreciate that, Jim. I love stuff like that. I do. I love stuff like that. You know, and guys, I'm a big fan of a marketing guy that's out there that, you know, as a kid, he was getting all these free marketing ads that he could get his hands on so he could learn what worked and what didn't work and how to do it. And he's turned it into a $100 million business right now, right? Plus for that business. So, but I'm a big fan of someone that sets a plan forth and does it. And I've been told every step of my life with every single thing I've ever done that I will not be successful at it. I didn't have the enough money. I didn't have enough experience. I didn't have the right background. I didn't have the right upbringing. You know, awesome. I get it. But thank you for giving me the motivation to say, hey, look what I just did. Right? What was that? Oh, my wife's Christmas list for my daughters. Drunk elephant. That ought to be interesting. But just waving in someone's face saying, hey, here you go. See, I did it. I did it. Right? So there you have it, folks. It's time to start thinking about it before New Year's gets here. And just keep something in mind. Never, ever, ever feel you need to wait for New Year's Day to make a resolution. I resolved today to start doing something. Don't wait till then. Right? Don't wait till then. Make the resolution now. Start the work now. So come New Year's, you're ready for it. All right? So let's go take a look at Amelia's trade from today. All right. So we've got 3 contracts on the SPY. It's a vertical spread. Okay. It's a credit spread, as you can see. So at 9:49 this morning, she did 3 contracts of the 393, 392s for 33 cents. And that was her credit. Her maximum risk in the trade is $1. Right, so take the $1, that's the difference of the 2 strikes, that's maximum risk. She took in 33 cents, which means her risk was the other side of 33 from $1. Take $1, subtract your credit, $1 minus 33 is 67. Her maximum risk in this trade is $67 per contract. Right? Her maximum profit is $33 per contract. Right? That was at 9:49 this morning. At 11:06, she exited out of that trade and she gave 13 cents of that the 33 cents back and kept basically 20 cents of that. So she had 67 cents of risk and she took 20 cents in on that 67 cents. Right? So we're talking about 30%, 28% ish, somewhere around there. Right? 29%. She got it written down. 76 minutes, 29%. Great job, folks. She does this in Trade Watch Alerts all day long. This is her setup. She does 3 trades a day. I get them every single day on my phone before the market opens, usually by 9 o'clock. My phone's going off, blowing up, showing me here's all the trade setups for today. All right. Aha. Okay. And I talked about S&P and I kind of walked away and left this part alone. Why I don't use a 200-day moving average. And I waited because I knew we had this as a topic for today. Okay. Why do I, Rob, not use a 200-day moving average? First thing I'm going to do is take you over to a template that will be a little bit less sloppy, not by much, a little bit, but it does not have on it the moving averages. Right? It just makes it a little bit easier for us to see at that point. Okay. So I'm going to go ahead and I'm going to edit this chart. And in my editing, I'm going to add to it very first. Actually, you know what? Can't do that. Let's do it. We got to go back to 2. I don't have it on here and I don't want to take the time to add it to this page, to this template. Okay. So let me bring this in. Let me get rid of pop. and it's going to be out of our way anyway. So watch what I'm going to do here. We're going to go ahead and edit this chart out, or you can just hit the letter E. And we're going to come down here. We're going to add the 200-day moving average, right? You'll see the chart will scrunch down a little bit. Did I not check it? Maybe I clicked on it, changed it, but I didn't put a check mark. I did not. All right, there we go. Okay. So here's our 200-day moving average. All right. We had a massive candle blow through it here back on November 30th, right? Which was Wednesday of last week, right? Just, you guys remember that day, right? What a great trading day. Goodness gracious. We locked in on the 30th, the 29th, we locked in massive numbers in power option plays. We crushed it. Actually, our week in power options plays was $77,000 between the 28th through the 30th. So between those 3 days, we had one winner, one losing trade, one break even, and the rest of the trades all in here were winning trades, right? We did amazing from 389 to 406. So 11 and 6, 17 trades, 15 winners in there, up to 16 grand on booking. Okay. So we had a great week going there, right? During that time period, right? And with that big move up, I was on a show the next day where I was interviewed and I was asked about what was going on in the market. I said, it's not surprising with the massive move we had yesterday. It's not surprising to see the market pull back a little bit, right? And then we gapped down right to the moving average. And we bounced off of it here. So we came above the 200-day moving average. We retested it with the wick. We gapped down, closed above one more time, and then we gapped this day down here and just broke the moving average and the fib line, the confluence there of the negative 272, which is a hesitation point. Okay. So based on that, the 200-day moving average didn't hold. People are looking for this move up and this retest and a bounce and that continuation up, right? And that 4181 is your major resistance level if you get that. And we still may. But instead of the 200-day moving average, I don't use that. I was with a friend of mine who was a coach for the company I was teaching for at the time. We were down in Texas. And I was telling him that we were driving to lunch at an event. And I was telling him that I do not use a 200-day moving average. I use a 233. And I'm in the passenger seat. And all of a sudden, as he turns his head to me, it's kind of like, his whole body moved. I was like, what? I'm like, yeah, have you looked at it? He goes, no, why would I? Everybody uses 200. I said, that's the reason why people use it, is because everybody does. I don't use 233 because nobody does. I use 233 because it has purpose to it. 10 and 20, someone just said, let's double the number. We got 10 on one side, which I can count on my two hands. I don't need my toes or my nose or anything like that. I can count on one hand. I could double it, easy math. I can remember it in my head, right? I can double it and get to 20. Okay. Well, great. But then you have the 50, which was, well, just a little bit higher. It's kind of, my moving averages have purpose to them. 200, well, 4 times the 50, we get to 200. That's great. I use a 233 moving average instead. Now, we did not make it up to the 233. Let me zoom in on it. I will do the best I can as far as how big we can make it. This dotted blue line up here is our 233. I'm going to take the 200 off of there. This dotted blue line up here is the 233. There's a confluence of this one line right here where we just moved through, just a couple of days ago. And we failed. So we got up near resistance and we rolled over. Right? I use a 233 because there is human emotion based on the 233. There's no human emotion based on the 200. Actually, so many people use the 200 and people go, oh, we should get out just a little bit before that because everybody else is using it. So we try to work our way around the system and that level keeps pulling down. If the level of where the 200-day moving average was 4,000, right? Maybe today we're getting out at 39.75. In a couple of weeks, people realize it's not quite making it up there, but it's getting close. So now we're getting out of 39.50, and adjustments keep getting made, which don't have rhyme or reason to them. It's, again, it is that fear and panic that steps in of, let me just get out before everybody else, instead of having something to focus on that is based on human emotion. So my primary moving averages are 8 and 21. They're exponential. My highest exponential moving average is a 55. Will you see any difference between 8 and 10? Not really. 21 and 20, hardly anything. 50, 55, some. All right. But the difference comes down to the details. When you make that trade setup and you have a high confidence level that that moving average holds, it's a lot more important to me than, well, you're only a point different. I don't do it for the purpose of different. I do it because of 4.5 million days of watching the 8 and 21 moving average cross, along with other, tests of 10 and 20 and multiple other levels. 8 and 21 gave me the best moving average crosses. That's why it's on my list, not for any other reason whatsoever than it's testing. If you've gone back and now I haven't tested in a couple of years, but because it took me weeks. If you go back and test that moving average cross and find that another level, for me, if it would have been an 11 and a 17, that's what I'd be using today. It's not about because it's fibs. It's just ironic that they are fibs. Okay. So anything above 55 becomes simple moving average. So if you're using a 100, it's simple. I use a 144. If you're using a 233, if you're using a 55 is exponential. Everything above 55 is exponential, a simple moving average. Okay. So Blade said, and exponential is better than simple. Well, it's not that it's better, but when you're shorter term, exponential puts more emphasis on today than it does yesterday. But when I'm going back 200 days, 233 days, I don't want it to be exponential. I don't want to put a lot of emphasis on one day and almost nothing 2 years ago. I want that whole, because now it's big picture. It's longer term. Why measure long term if I'm going to focus on short term results? Which means most of my emphasis goes on the recent moves. That's not what this is. It's bigger picture. From a shorter term moving average, yes, I think that exponential are better. All right, you're quite welcome, Blade. Quite welcome. All right, fantastic. Where are we at? Okay, so check out the 55. Check out the 233. If you like them, use them. If you like 200, I'm not telling you not to. The point or the topic today is why I don't use a 200-day moving average. There you have it, right? And I do go through a bunch of this, a little bit more in depth in the Trading U1 as well, all right? There we go. Drop in the symbols that you guys want me to take a look at. Brennan knows she's already loading up the chat there, guys. So drop in the tickers that you want me to take a look at, and we will jump on in. All right, let me bring up symbol grid. Let's get all symbols. Okay, there we go. I love it. Qs. Okay. All right, we can see the entire fib on Qs. Now I'm going to move this off the screen, put it on another monitor where I can still work with it and not take up the real estate here. So just as I said before, Brenda, we're kind of in that sideways pattern there, right? Last couple of weeks. We are sitting at a 1 rank on Qs. It is a switchback trade, so we could trade it up or down. So I like it very much. If we do move to the downside, 275, to the upside, 293. Keep in mind what causes that move to the downside. PPI coming out tomorrow. Fed rate funds coming out on Wednesday. Both of these could dramatically affect the market. We are in a holding pattern, whether you realize it or not. After the slight increase or decrease in CPI last month, and then PPI, there was a lot of questions of, are we nearing the end sooner than we thought? The Fed chair came out and I think spoke too early as to what he sees happening. We're still at a higher chance as of yesterday. I didn't look today after anything, but as of yesterday, we're still a higher chance of getting a half-point rate hike than a three-quarter rate hike. And that would be great for the market, right? I don't know if the economy is ready for it yet, but okay, we'll see. But this last 2 weeks after that previous CPI and PPI announcement has been probably one of the most pivotal points for the markets and the Feds in a very long time. Okay, so we're waiting to see what that announcement is on Wednesday from the Fed, 2:30. I mean, 2 o'clock is the actual announcement. 2:30 is the press conference. That's where open mouth insert foot tends to take place. Is 888 a number though, Philip? Philip said, can I speak about the 888 moving average? I'm not even sure. 888. Yeah, it's not. 888 is not a fib level, so I'm not sure, Philip. 987 is. If you go for the midpoint, it's 798.50, 798.5. But 888 is not. Here's our number series. There's nothing on here. It's 610 and 987. 377, I could tell you, I know friends that use that one as a major. But sorry, if you have other info on it, let me know. I'll be glad to answer it, for you. All right, so there's Q's, Brenda, and then EOD. Ooh, come on. Check it. Not really sure why it's taking so much time. All right, EOD. There we go. EOD. Unless you were talking EOD for end of day, Brenda. EOD is not a stock I'd really look at. It's a $5 stock that's on a bearish turn right now, so I'd be very cautious. This is going down to 420. All right, Roman's asking for NVIDIA. So NVIDIA had a bullish bias and a rank of 2 for yesterday. Let's see. So what's going on with it, Roman, right? We keep pressing up into that 171.93, right? Our moving average is getting higher, right? We're still spreading apart, 55 and 21, still widening. So the pattern is still there. We have a pressure cooker building in place right here as well, right? So we've got to focus on that pressure cooker building and watch that 171.93 for the break, retest, and bounce. We tried it here on Friday and couldn't do it. And the ice chipper, the icebreaker, came for this back on 12/1, where we just kind of broke through the ice a little bit on the top there, on that resistance line with the wick, which gave way for this, on Friday. So now we're looking for, where does the breakout, the retest, and bounce? 181.80 is where we're looking at as resistance. So we're talking about a $10 move on that breakout to the 882. So I do like it a lot, Roman. Let me know if that helps. Any other questions on it? Drop it in there for me. Blade's asking for UNH, which is United Healthcare. All right, so there we go. All right. So they've done extremely well for themselves, very well for themselves. Good move to the upside. Their earnings, January 13th is their next earnings date. Unconfirmed yet. The earnings, they did good on the earnings, is what it was. Good pullback, strong move. We were in a 1 rank, as of Friday's close there, Blade, and then we gapped up, stretched down, and ran, and we ran right where we were supposed to, the 545. So we would have been out at 544, getting in at about 541.5 on that. So good setup. But right now, we needed to either A, pull back and close and bounce, or break out of the 545, retest and bounce. My only fear there is 1, 2, 3, 4 slightly lower highs. So you got to make that decision if you feel comfortable enough to take that. All right, I hope that helps, Blade. Let me know. Tripp's asking for AMD. So we broke out of the D-bond, the dreaded box of neutrality. We talked about that last week. Oh, I know it is. The 233 is still on there. See, it just scrunches it way too far now. Okay. So yeah, Trip, truly in the bearish bias. We're at a rank of 3 here. So pull back to the 71.5 and fail. And we're looking at 66.5. IBM. So IBM doesn't excite me with anything that I don't collect premium on right now. I mean, you look at it for the last week and a half, 2 weeks, we've got small candles, little move, up and down, pinned around the 8 moving average. Unless I can get some premium for it, I'm not interested, but 149.5 is our resistance level. And then there's Micron. There you go. Debbie said both team and EH are on the move. My calls already doubled. Nice job. Nice job, Debbie. I love it. So on Micron, Trip, we're in a bearish bias. 53.60 is the downside target. We're at a rank of 3. Right? There's nothing there. Earnings coming up soon. It's just everything in the world seems to be against this. Break the 53 half, retest and fail, and 50 half is the next downside. I like that a lot better as far as pattern goes. Hope that helps, Trip. Philip or Felipe, I'm not sure which one. I apologize for whichever one was incorrect. ARKK. ARK. Or not. Come on now. Oh boy. Let's see. ARKK. I just don't have any of my normal fibs drawn on. This is a 1 minute chart. Let's go. It's supposed to be 5. Let's flip that back. Let's go to a daily. So everything has been in this sideways drift. I know, Kathy Woods talks about this all the time, and it's just great, and it's doing wonderful, and someday we might, blah, blah, blah. So we're headed down to the 272. If you think there's any bullishness available, I really want to see us get above that 55. We've got lower highs right now. Bottom's holding. So what does that mean? It's a descending triangle. So we're looking for the break to the downside, right? About 40% is the move to the downside. All right. So I hope that helps. Let's see. Did we get this back? We did. Apple. So Patty's asking about Apple, and Patty's got a plan in there. I love it when the plan is dropped in. Apple, a bounce off of the 618 today. Okay. So the nice thing on the 618, Patty, if we can get that bounce off of that 618, we've got room to move to the upside, and the 8 moving average is all the way up there. So although we're in a rank of 2, the 8 moving average is not a problem for us. It's way out of the way. So we're really good on that one completely, right? So I like the setup. It also gives you the opportunity of the break, the 141.72 retest and bounce, drop, fail off it with a room down to about 139. All right, I hope that helps. 888 is a moving average secret traders refer to Barings Bank of HK. Yeah, I've not heard of it, Felipe. I'm going to look at that. I'm making a note now. Not on that page. That's for taxes. Let's see. 888 moving average. All right. Barings Bank HK. I appreciate it. Thank you for that, for coming back and telling me what it is. I'll look into it, see what I can find. Always interested in stuff like that. Blade said, when is that channel pattern starting on UNH? Okay, so UNH, I think there's just a fib on there. I just didn't have it zoomed out enough for you, Blade, to see it. I said, thank you, and I didn't think about the switchback. Good. Brenda said, is the 888 simple or exponential? Felipe, I'm guessing it is a simple moving average is my guess. But if you know that, let me know. So there's the fib on it. There's the fib on it, Blade. Right? It's not a channel, it is a fib. Huh. So Debbie's saying that 888 has biblical references too, to gematria. Let me see. It's easier for me to take a picture, a screenshot of the text chat there than going downloading it. Also, the name of the account 888 of Nick Leeson. Wow, cool. All right, so Blade, I hope that helped as far as UNH, that it was not just a channel, that it is a fib pattern that's up there. Not my favorite fib pattern, but it definitely is one for them. All right. So with that, folks, I think we're about done. Last candidate was gone through. Take advantage of some of the links that Lee dropped in the chat box. I'm going to leave the room open for a few minutes so you guys can click on those and grab that. So with that, have a great rest of your day. Make it a profitable one. And remember, you're just one trade away. Take care, everybody. I will see you next week at our last one of the year for Power Option Plays. Take care. See you soon. Bye.